Hi guys, in last video I talked about what is lender's mortgage insurance and how it works. Because LMI can be very expensive, can cost you thousands of dollars if not tens of thousands. So it'll be much better off if you can avoid it altogether. So in today's video, I'll discuss how you can find whether you may need lender's mortgage insurance in 3 simple steps, and then what options you may have to avoid it. And towards the end of this video, I'll give away some tips so that you can borrow more than 80% without paying lender's mortgage insurance so that you can save some money. If you are new here, my name is Dennis May. I'm a licensed mortgage broker for more than 10 years. It's our job as a mortgage broker to search and negotiate the best loans for our clients so that they don't need to spend hours and hours of time dealing with one bank to another by themselves. But saying that, there are still rules and guidelines that most banks follow when they assess your loan applications. So in this channel, we would like to share our knowledge and business insights and hints and tips in mortgage for people like you to understand at high level on how likely you'll get a loan and at what cost, so that you can get yourself prepared in advance and don't get a nasty surprise later on. No matter you want to buy a new home, change your loan for a better deal, or invest in properties. So make sure you hit the subscribe button and press the notification bell so that you don't miss a thing. Now I'm going to talk about how to avoid lender's mortgage insurance and the tips that most people are not aware of. And let's get right into it. When we talk about a mortgage, the first thing we need is LVR, or loan to value ratio. LVR is a ratio of loan amount over the value of security property. If you buy a property for $500,000, you will borrow $400,000. The LVR is $400,000 over $500,000, which is 80%. 80% LVR is a sweet spot, because if your loan's LVR is more than 80%, your loan will need lender's mortgage insurance and will become expensive. If we take LVR out of 100%, what's left is the deposit or equity ratio. For example, if LVR is 80%, the deposit required is 20%. But just be mindful when I talk about deposit here, I mean the money you will put towards your property as down payment. Not all the money you need to pay when you buy a property, because there are other costs you need to pay out of your pocket besides deposit. For example, you have a total saving of $125,000, which you want to use to buy a property. However, the stamp duty and government charges can cost you around $20,000. And you also need to keep some money to cover your legal cost, even for removalist, say total $5,000. So total cost will be about $25,000. So the money left over is $100,000, which you can use as a down payment or deposit. Now, first things first, let me show you here how you can find out whether your loan will need lender's mortgage insurance in 3 simple steps. Step 1, work out how much deposit you will have after all the costs are paid for. Like in our previous example, out of your saving of total $125,000, after all the costs are paid for, you have a deposit of $100,000. Step 2, divide the deposit by 20%. It will give you the maximum price of the property you can buy at 80% LVR. In our example, $100,000 divided by 20% is $500,000, which means you can buy a property up to $500,000 at LVR of 80%. Step 3, multiply the property price by 80%. It gives you the loan amount you need to buy such a property. In our example, $500,000 multiplied by 80% is $400,000. So which means you need to borrow $400,000 to buy a property at $500,000 with deposit of $100,000. The LVR in this situation is 80%. And you don't need mortgage insurance. Now the maximum property price we worked out is $500,000 in our example. But what about if the property you want to buy is more than $500,000 and close to $600,000? First of all, you need to work out how much deposit you will need to buy a property of $600,000 at 80% LVR. You simply multiply $600,000 by 20%, which gives you $120,000. That is the deposit you need at 80% LVR. So you are $20,000 in short. To close this gap, you may have different options. You can delay the purchase and go back to save more money to reach that deposit target. You may be able to get some support from your parents or family. Believe it or not, personal loan is also a choice. In fact, we help many of our clients to cover the shortfall in deposit using personal loan. It turns out cheaper than LMI in many cases. Of course, you can also choose to use LMI. There's no good or bad options here. It really depends on your personal situation and how quickly you want to buy a property. Let's go back to our example. Your target property price is $600,000, but you only have $100,000 as deposit, so you need to borrow $500,000. This is LVR in this situation, 83%, which is $500,000 over $600,000, which means you will need a lender's mortgage insurance if you can't get more deposit and you want to buy that property now. Now let's see what happens if we can somehow increase the security value from $600,000 to $625,000. The LVR is reduced from 83% to 80% for the same loan amount to buy the same property. But how? Now here comes a new solution, which is called family guarantee or family pledge. In essence, if your parents or family members own a property outright or their mortgage is under 80% of their property value, they can lend some of their property equity to you as a form of security guarantee to reduce your loan's LVR. In our example, if your parents are in a position to offer $25,000 out of their property to your loan, the security of your loan will increase from $600,000 to $625,000. So you will borrow on 80% to avoid lender's mortgage insurance. Family guarantee is the most effective way to get you into the property with low, even zero deposit. This is the option I always discuss with my first home buyer clients when their loan is in LMI territory. In fact, I'm helping my son to buy his property with family guarantee to borrow 125% so that he can borrow 100% of the purchase price plus all the costs involved. From 1st of January 2020, the federal government introduced a scheme called First Home Loan Deposit Scheme, or FHLDS. Yeah, that's right. This scheme will allow the eligible first home buyers to purchase a home with only a 5% deposit without lender's mortgage insurance. I'm going to make a video to discuss this option later. This should give you another reason to subscribe our channel. Sorry, I'm joking here. Now it's time for tips. If you are a medical doctor, solicitor or accountant, here's good news. Some banks will waive your lender's mortgage insurance for the loan up to 95% if you are one of these professionals. But what about if you are not one of them? I also have good news for you, which is one of the secrets in mortgage lending. It is possible that you can get lender's mortgage insurance waived if you borrow up to 85%. The interest rate can be slightly higher if you choose this option, but it can still turn out to be cheaper than using lender's mortgage insurance. By the way, not many lenders have this option. In this video, I discussed how you can find out whether your loan is on 80% LVR based on your deposit, and the options you may consider to avoid lender's mortgage insurance if your deposit is less than 20%. You can manage to increase your deposit level by saving more money or borrowing from personal loan, or using family guarantee to increase your security value base. You may be even qualified to get LMI waived. If you want to find out which options are available for you, we can help. Please give us a call or make an inquiry. You can find our contact details in the description area below. I would like to know your thoughts. Whether you will wait for years to save up enough deposit to avoid LMI or buying a property as early as possible, even at the cost of lender's mortgage insurance. Please leave your thoughts and questions in the comment area below. I will read your comments and get back to you if you need any advice. That's all guys, that's it. Make sure to press the like button if you find this video helpful and share it to our friends if you think it will help them as well. Also check out the video on the right that will give you extra information. Alright, thank you for watching this video. I will see you on the next one.